What if the entire AI boom, the trillion-dollar data centers, the GPU frenzy, the stock market rally, was all built on one fragile company? And what if that company doesn't have a real business model? Ed Zitron, one of tech's most outspoken critics, argues that the AI bubble is essentially an OpenAI bubble. He calls the ChatGPT maker the Lehman Brothers of AI, the single fragile pillar the whole industry is leaning on. Here's the math he points to. OpenAI's 2025 audited financials: $13 billion in revenue against $34 billion in costs. That's a $21 billion loss. They spend vastly more than they earn on data centers, GPUs, and infrastructure. Subscription and API revenue just aren't enough. If this were any other industry, we'd call it what it is: a company burning cash faster than it can make it. But in AI, we call it scaling. Zitron warns that if OpenAI contracts or restructures, the shockwaves would hit everywhere. Oracle is the most exposed. It bet heavily on building data centers, specifically for OpenAI workloads. Nvidia shareholders would panic. Data center REITs would reprice overnight. AI startups funded on OpenAI API dependency narratives would lose their thesis. They all depend on the perception that OpenAI will keep growing forever. And Zitron argues that perception is dangerously disconnected from the financial reality. The argument is uncomfortable but worth considering. The entire AI capex cycle might be a house of cards with one name written on every card. And what happens when people start asking whether that name is actually worth trillions? Look, OpenAI is an incredible research lab. GPT 5.6, Sol Ultra, genuinely impressive technology. But research breakthroughs aren't a business model. And at some point, the balance sheet has to matter. When someone like Ed Zitron, who's been consistently skeptical since before it was cool, says the emperor has no clothes, maybe it's worth listening. The AI industry may be brilliant at building models. It still hasn't proven it can build a business. Follow UnBull. We see through it.